So, hello everybody. Today we've got Jordan Jewitt, and I can see from your top, you've got it displayed nicely. You're the owner of For the Trade Accountants, right?
Yeah, no, thank you for having us on. I appreciate that. You can tell we're quite out there with our colour and our branding, but yeah, we accountants for the trade is who we are, and as the name would suggest, we mainly deal with tradesmen and construction industry.
Yeah, I mean, I come across you guys on Google. I'm looking for an accountant actually. Jordan, do you know a good one? But no, seriously, my accountant passed away, bless him.
Yeah,
But anyway, yeah, I looked on Google and you were a standout company for me because I wanted to speak to someone specifically that dealt with trades, and really understood us. And yeah, just on about your branding. I'm wearing mine, but I'm covered in paint. I've just realised I've just finished a job.
As
Uh,
I was, I was saying just before, I'm very purposefully keeping my camera exactly as it is because if I turn it to the side, you can see my bad cutting in that I done when decorating the office. So it's purposely like this, knowing that we're on with painter and decorators.
no, we can forgive you, mate.
Yeah,
So yeah, I reached out to Jordan and just said, look, I've got this group. It's a really great community. Spoke about what we do with mental wellness and guest speakers and stuff. And as the group develops, I want to cover all aspects, and I really want to help painters from, including just setting up a business and an accountancy and saving money, hopefully, and all the rest of it. So we've got a whole host of topics we're going to talk about. Today's our first one, and we're going to start from the beginning and talk about self-employment, what it means, and yeah, we're just going to chat, and there's no presentation as such, but yeah. So say someone's just starting out, um, it's going well,
yeah.
and they're a few months in, and they're like, what do I do? I haven't even registered. So let's
And
start from the beginning.
this is a common phone call that we get where people ring up and just say, this isn't my area. I haven't got a clue what I'm doing here. I just need somebody to talk us through and help us through it. So it's one of those things where you don't know what you don't know, and having somebody talk you through it and try and guide you is hopefully what we can do. So the first thing people often think of is the tax return. That's what comes to mind when you think of being self-employed. Well, I need to do a tax return, but the consideration first is, well, how should I be set up? Should I be a sole trader? Should I be a partnership? What does that actually look like? So typically when you're first starting out and you're talking, you might have just left a job and go, right, I'm going for it on my own. Most of the time, the right thing to do is just to set up as a sole trader, which it's less work from an admin and an accounts point of view, and you're better off trying to just keep your life as easy as possible when you're getting started. So
Yeah.
when we're talking about being self-employed, what what we're talking about is registering with HMRC to say, look, I'm no longer employed. I'm going to be responsible for doing my own taxes and doing my own filings. So that when we're talking about being self-employed, that's what we're talking about. So it isn't as painful as what people think getting registered. So the best tip, especially for tradesmen, if you are doing it yourself, the HMRC general helpline, if you ring that number at 8:05 in the morning, you get straight through and you don't have any hold time. Ring them middle of the day and you're on hold for half an hour, 40 minutes, and you've lost half your day. So
Mm.
if you were to ring them up at 8:05 on a morning, all you can do is explain, oh look, I've just went self-employed, and the person on the other end of the phone will literally answer the questions for you and tell you exactly what you need to do to register. So
Okay.
in terms of speed and getting it off your list, the best thing to do is actually just to ring them. You can do an online form to register, but all of what we're talking about here when we're talking about register, it's just to get your UTR. That's all we're talking about. So when everyone knows you've got your own national insurance number, but going self-employed, it's important to get that UTR, which is just a different tax sort of identifier, which tells HMRC that you're self-employed and you need to do a tax return.
Okay.
So that's the first and most important thing to do. So in terms of times and when you need to do that, so we're pretty much at the end of the tax year now, so it's a good example. So if you were to go self-employed as of today, or realistically at any point in the last 10 or 11 months of this tax year, you've got until the 5th of October coming before you even need to do anything. don't leave it that late. Do it as soon as possible. As soon as you go self-employed, just ring them or fill in the form that I'm talking about, and we can easily get the link shared so you can get the form.
So just for reference, we're on the 24th of March now, just for people watching it back. So okay, yeah.
Yeah.
No, it's cool.
Whereas if you were to go self-employed in 2 weeks' time, so after the 6th of April, you actually don't need to do anything. It'll be October 24 before you've got any deadline to register. Just get registered. It's so simple. It's so easy to do. Just get it out of the way. Don't leave it till the last second, because that's when you start getting close to deadlines. So that's the first bit to get done.
Yeah. So I guess essentially, say you're a few months in, and people are like, oh God, your partner's onto you. Have you registered yet? Like, no, I don't know what to do. So you just got to call up, and
Yeah,
it doesn't matter if it's slightly late. Just call them
yeah.
up, and
And just
they're
do
under, they're going to
one
be
step.
understandable, aren't they? Because let's face it, if you're registering as a business, they're going to be taking some money off you. So they're going to be understanding.
Yeah, yeah.
Okay, so that's the
In that,
basics. Is just really to just register, get your UTR. The chances are, if you're just starting out, you're going to be a one-man band.
yeah, yeah,
Um,
that's it.
you need to get your first year in, see what your turnover is, and then it can develop going forward.
Yeah. So the first year, it's always quite difficult to give you sort of generic rules to stand by. But when we're talking about the tax year, what we're talking about is the tax year runs from the 6th of April up until the 5th of April, and that's every year runs the same period. You might hear a lot of people talking about, well, I need to do my accounts up till the 31st of March. Same thing, 31st of March and 5th of April in HMRC's eyes are identical. They're the same thing. So what we're talking about, if we're coming to the end of this tax year now, which ends in 2 weeks' time, so we're on the 23rd of March, so it ends on the 5th of April, you've got until the 31st of January 24 before the deadline. So you do still get a good 9 or 10 months, and I probably feel people giving us eyes going, no, you do it in January, you do it just at the end of the deadline. But you can do it from April, and any good accountant will be shouting at you from April and May going, can we get the stuff off you now so we can start thinking ahead and working out. And as an accountant, working it out in April is the best thing you can do, because if you've got a tax bill, it gives you 9 months to plan for it, rather than doing it in January and then going, well, how am I going to come up with that money? The sooner you get your information together, so it is the right thing to do. So when obviously we're talking about a self-assessment tax return here, the way to think about it is, what we're doing is just trying to work out, right, how much have you sold? So what have you charged your customers in the year? How much have you spent on paint and rollers and other materials? So we'll start with your sales, we'll take off whatever you've spent on your materials. But then we have to take off everything else you've spent. For example, accountancy fees, for example, fuel for running the van, you might have, for example, an office, probably not when you're starting out, but you've got other expenses that you have, clothing costs, all this type of thing. So when we're talking about self-assessment, all we're doing is trying to go, right, that's what your sales are, that's what you've spent for your customers. We need to include as much as we possibly can in this bit here to be able to get your profit down, usually get your profit down to a lower amount, because the lower profit you've made, that has the knock-on effect on the tax of how much tax you're going to pay. So what we do as an accountant, where we'll ask you lots of questions and say, right, have you spent anything on this? Where's your phone bills at? Where's your public liability? All these different types of things. And we're trying to go, right, your sales might be 30, 40, 50 grand, but we need to get that down. We don't want to pay tax on the full amount. We need to try and get as much expense in there.
I must admit, accountants I've used in the past, because they've been just generic ones dealing with all sorts of people, they'd be like, send us a list of your expenses, but not really saying specifically what you've just been asking, because you know what trades are all about. So, and that's really helpful. And just, I guess this will be another topic of conversation, what you can claim back and all the rest of it. So that'd be great to do it at some stage to give people a good idea. But say you've started out, and maybe you're a few months in and you've just haven't kept track of receipts and everything else. What's the best practice without making it too overcomplicated? So you do a month's worth of work, you call your customers, it just the obvious of just keeping as many receipts as possible.
I think there's no right or wrong answer. That's the first thing to say. Me as an accountant up in the northeast of England might have very different to somebody that's just an online accountant, for example. There's lots of different ways. In terms of ease, online accounting softwares came leaps and bounds in the last 5 or 6 years. And what you're able to do now is be able to take a picture of your receipt. So you might, and this might kind of look at your age a bit more, Gary, but if you go back 20 years, what your accountant would have told you is, right, come and big carry bag full of receipts.
What are you trying to say, Jordan?
get a big bag of receipts and come and drop it off once a year and come and drop everything off. Whereas actually in that is still right for some people, and I'm not saying that you have to do it online, but the software is changed that quickly to make it easy for you to be able to put fuel in the van. You get in the van and you go, and most people grab the receipt and it goes in the top, it goes in the side, or it goes in your wallet and then shows up at some point in the future. Yeah. But putting it on your dashboard, taking a picture and going, right, I've got that receipt and I know it's working its way through to my via the magic of the cloud, it's working its way through to my accountant to be able to keep a hold of. So being able to take pictures, we found it takes so much hassle off you, but you've also got other ways of doing it. One of the things that I like is having an envelope for each month and going, that's what I've spent this month, because that gives you, as the business owner, you can go, well, that's my 5 invoices for my customers, there's my 25 receipts. You don't have to be an accountant to add up how much you've sold and what your costs are and know, well, roughly that's how much I've made this month. So that's quite a good way of still just keeping a hold of everything, and whether you're doing your tax return yourself and adding it all up yourself at the end of the year, or whether you're going to dropping that off with an accountant, they'll appreciate getting it in the right sort of the rough order and being able to say, right, this is what you've spent.
The question. So in terms of receipts, what if we're not 100% sure what's, we can take off as tax deductible, if that's the right word? Do we just scan it anyway and then you'd have a look and just sort of say, you can't get away with that slap up steak meal, Gary?
I would rather be saying, no, you're taking the piss a little bit too much there. There's too much that we're doing, and going, like, rein that in a little bit, rather than going, well, getting to the end of it and go, you've spent no money. What, like, you haven't bought anything in the year. I'd rather have it the other way and go, no, we'll get rid of that one. We'll get rid of that one. But my best advice for somebody when you're first setting up is, this is more so if you're dealing with customers rather than like working as a subcontractor for somebody. But if you're dealing with customers, having a separate bank account for the business to your personal account. So what you can be doing, whether you use like an online bank or if you use a Halifax or a Lloyds, whoever, or you use a Starling or a Monzo, but having that separate business account, one, means that you're not giving your customers your private banking details. You're giving them a separate account, which is for business money. But then the trick is trying to pay for everything out of the business money. So all of your fuel, all of your screw fix, all of your materials are going, right, I'll pay for that out of the business. And then you're almost paying yourself a wage out of that account. So then it keeps it clear, well, that's personal, that's business. And then what we're trying to do is going, well, you need to keep receipts for everything that you're spending out of the business account to be able to show, right, this is what I've done and this is what I've spent my money on.
Yeah. And as an accountant, so me as a self-employed painter, do you want to see me, if I don't go, all this advanced technology of photocopying receipts and sending them. So if I've got 2 options, put in an envelope each month, send them to you, or I could put it on a spreadsheet, which would be easier for you, and then send you like an envelope with all the receipts. In terms of like fees, accountancy fees, and we're not talking about fees today, or we're not doing it about fees, we're doing it about helping people. Is it better for you guys to have details on a spreadsheet every single month and statements and basically what I'm trying to say is we do as much as possible? Does that make your time was it the same cost, whatever?
No, it is. A lot of accountants will say, yeah, do it on a spreadsheet. Given that I work with that many tradesmen, and I would hope I know tradesmen quite well by now, the more you do, the more you tend to break. And so my personal approach is trying to take as much of the work off you as possible and being able to do it efficiently, because there's no point taking loads of work off and going, right, I'm going to charge you per hour, and therefore your accountancy bills are going to go sky high. It's trying to do it in a way that we can work together seamlessly to be able to get that output. So I'm not having to I'm charging more for my advice rather than sitting typing receipts out, which is the last thing you want an accountant to be doing, because it is expensive. But in terms of spreadsheet, I've got no issues with that. It does tend to make it a bit easier to be able to see what you've spent your money on. A lot of people are a bit more standoffish and don't want to do that, in which case, for context, in terms of fees, we would be anywhere, for a sole trader, anywhere between £300 and £600, like once off for a year. So your £300 is almost like, there's all of my figures typed out. But what you're then paying us for is to go, yeah, but you forgot about that. You didn't know about this tax relief here, or change that and do something differently, because that's going to save you X amount of pounds. So it's not as much about the typing out of the receipts. It's more about just the advice and actually filing it. Whereas at £600, you come and dropping a big bag of receipts off and going back, give us an accountancy fee and a tax bill out of that, please, and trying to then turn that into something useful.
What about if, going back to your point about a separate bank account, what if someone's using their personal one and all the money's going in it? You're paying your vet bill, your kids' clubs, your screw fix, all the rest of it.
OnlyFans, which seems to be happening more and more and more, coming through my bank account. Not my personal bank account, in case the listeners is watching.
We're respectable painters and decorators.
I'm sure.
So, yeah, how does that work? So we need to break out that statement, what's what, or we just send it to you and let you do it, or how's it work?
The answer is, it depends on you, and it depends on how much you've got going through. So first thing to say, make sure you're not a limited company if you're doing this, because a limited company, you can't be running it through a personal bank account. Just making that crystal clear. If you're self-employed, there's no harm in actually doing what you're saying and having it in your personal account. If that was the case, what we typically do, if you're one of the how do I put this delicately on camera, if you're the kind of person that doesn't have a lot of money going through their bank account, there's less expenses coming out, so it's quite easy to be able to say, well, that's your mortgage, that's your council tax, we'll ignore that, and a lot of the rest is there. Whereas if there's hundreds and hundreds of transactions, typically what we would say is just print them out, go through and highlight everything that's business, or either drop us a big bag of receipts off with it, or just go through and highlight, right, that one was business, that one was business. That can be a bit of a ball ache though, because what you're doing is wait until the end of the year and going, I've got 20 pages of bank statements that I've now got to sit and go back through. So again, with all this types, doing it quickly is the key, and then it stops it building up and going, right, I've now got a year to go through in one go. If you were to do that every month or every couple of months and go, right, that one was business, that one was business, and getting an idea of what you spend in that way.
So why is it, Jordan, no, hands up, guilty, why the hell do I leave it to the end of each year? And it's like,
you're not the only one.
Like, every month, it'd be so easy. Here's the jobs I've had in. Here's what I've spent. Let me just 10 minutes, put it on a spreadsheet.
Yeah, I know it does.
It's crazy.
I think it's probably more of a psychology thing, but I think it's with what you're doing. It's quite a physical, labor intensive job. So I think you come home from work and go, oh, that's me done, and I want to try and take the foot off the gas a little bit. Whereas I sit in an office all day, so I'm just using my brain all day. So it's my brain that's tired rather than the body. So we're in that mindset of going, well, we need to do this, we need to do this, we need to do this every month, and planning that way. So I think it's difficult, but yeah, everyone does it. The only thing I ever recommend is getting an accountant that doesn't take shit and says, you need to get this. I've asked you 15 times how you need to do it. That I guess that would be the other side of things. But
that's what I like about when I come across your website. Like you don't take any shit, and I love the way you come across. And it's good because sometimes we need a kick out the backside. So that's brilliant.
That's what I've got a girl called Kaylee that works with us, and that's why I've got Kaylee, because she's just the one that chases everything, gets everything in, to make sure everybody's on target. So that's.
Do you know what it is, Jordan? Even if it's like a WhatsApp saying, right, come on, Gary, it's been it's end of month, whatever. These little bits together, won't it take 5 minutes, or just little prompts? Maybe that's what it is, because weeks, months go by so quickly, don't they? And before you know it, you're like, shit, I've got a year's worth to do. Yeah,
Put it this way, it's what, 2 months since your last tax return was done, or 2 or 3 months since your last tax return, and I'm sure that'll just feel like yesterday. It's already now the end of another tax year, and we're starting to go again and
yeah, yeah.
start thinking about next year. Yeah,
Right, Jordan. Well, it's a great introduction, I reckon.
yeah,
You know, it's you don't make it sound so scary. So anybody that's starting out or haven't registered, it's very, very simple to do.
yeah.
Simply
So
call up.
I've got a couple of quick tips as well that I think will
Yeah,
be
yeah,
worth sharing. These are the kind of things that it's important not to trust HMRC as much as you can, because if you trust them, they might do so. At the end of the day, it's mostly an automated system. So a couple of things I just want to make people aware of. So there's a thing called Class 2 national insurance. Most people know it as your pension stamp. So it's a privilege. It's a fee you pay as a privilege to be self-employed. That's what it is. So it's 163 quid a year. Most times your accountants will say your tax bill, or even when you're plugging it into HMRC's website, it'll say your tax bill's £3,000, for example. That will include this Class 2 national insurance.
okay.
What HMRC are in the habit of doing, a lot of people when they register, they register for self-assessment. They don't register as self-employed. And I know that's only a slight difference, but when you register as self-employed, you registered for these national insurance contributions. The way to tell if it's been done wrong is you might have went and filed your tax return in January, and they'll be sending letters out literally this month correcting it, but you'll have filed your tax return and said, right, my tax bill's £2,000. They'll then amend it and come back and you go, no, your tax bill's only 1,800 quid. And you go, oh, great, saved 200 quid. They've knocked a couple hundred quid off you. And you go, right, brilliant. You need to ring them up and change it. So what that is so important, because that counts as you being a taxpayer for the year. So when you get this Class 2 national insurance contribution, what that's doing is making sure you get your full state pension when you come to retire. And I appreciate if you're just getting started, you're probably not thinking about retirement, but every year that goes by, it makes it harder to get full contributions. So if you notice your 170 quid come off your tax bill from being amended, that's what you need to do, is just ring up HMRC and say, you've taken me Class 2 national insurance out, I need you to add it back in. So really important. It sounds so small and it's only 170 quid, but actually it makes a massive difference to your state pension.
Yeah, and there's many members as well in the group which starting out as a second career and stuff. So yeah, that's cool.
Yeah.
Any
Yeah.
other tips, or is
Yeah.
that it?
So one especially first year when because what typically people don't wait until the start of a new tax year to go self-employed. It'll be middle of the year, and like what you're saying, whether it's like almost like a second job or a secondary income at the start, or for example, you've worked for somebody for 6 months of the year, you've left, you've then went self-employed. What you need to be making sure you do is getting either your P45, which is when you've left your job, or your P60 if you've been there for the full year, but making sure you get the P45 or P60, because what that tells you is this is how much you've earned in your job, this is how much tax you've had taken off you. So you need to make sure when you're doing your tax return, you include those figures and then add on your self-employed on top of that. So it is really important that if you have had a job, and it's easy to forget, especially if you left in April 22 it'll be, and you come to do this year's tax return, you just think, oh, I've been self-employed for the full year, but you actually might still have some income that you need to remember. So that's a common one we often see that gets missed off.
Yeah, brilliant. Yeah, great consideration.
Yeah.
Any more, Jordan?
I could sit and talk for the next 3
No,
hours.
but listen, we're going to be doing a series of chats, so this is a fantastic start, and I really, really appreciate your time.
Yeah, no problem. Thank you for having us.
So we'll catch up next time.
Yeah, brilliant. Cheers.
You take care. Bye bye.